Good morning, everyone. Good morning. Bob, I'm going to mute you. If you want to talk, you want to ask a question, go ahead and put it in the chat box there. And let me know that you can hear me. That'd be nice. Morning, Greg. Morning, Eucharist. Dan, how you doing? Bob, good morning. Awesome. Keith, good morning. Yes. Good morning, Cherry. Nice. Well, I'm glad you guys could join me again. Eucharist, I'll get to your question in just a second. Let's do a review of the markets here. And so we had the Dow up. The YM mini futures were up close to 90 points this morning as we got started in trading. You can see it's tailed off quite a bit here. We're only up 38 points on the YM. The NQ still holding strong up there. Looks like it hasn't really backed off much. Very strong up move at the first 5-minute bar. Same with the YM, but that's really starting to back off at this point, and we're below that 50% level. Interesting. A few days ago, let me see if I can scroll backwards here. I saw an institutional sell order at 3,600, and it was not offset. It's not on the chart, on the SD chart, but I saw it in real time during the day. 3,600 was the number. It did not get offset, and we had a little bit of a retrace here, and then it just sold off really dramatically. And of course, yesterday we were down quite a bit, and now it looks like we're selling off again here. So if you pay attention to the supply-demand number, the SD number, and you don't see any offsetting transactions, and I watched carefully at this time period on the 1-minute chart for an offsetting transaction of some sort, I didn't see it. We dropped to minus 3,600, and it just stayed there. No offsetting transactions. Typically, offsetting transaction, which means it's going to go up 3,600 or up 1,200 or 1,800 multiple times. Didn't happen, and it usually happens like within seconds, at least within 1 minute after that big institutional sell order or institutional buy order. We did not get that. So I don't know if the selling that we had yesterday, there's a lot of different theories that we have here about where or why those happen. Somebody knew something, somebody knew something about the tariffs, and so there was a huge sell order in here. And they knew that the market was going to decline. So anyway, hey Dan, how you doing?
You guys can share your screen, buddy.
What's that?
Your screen's not shared.
Oh, thank you. I appreciate that. See, Dan is one of my private clients. We've been talking a lot lately, and so I appreciate that reminder. You can keep yourself unmuted if you want, Dan. You can join in the conversation here. Okay, so let me back up now that you guys can see my screen. Everybody can see my screen okay?
Gotcha now.
Good. All right, so let's go back here then. I'll show you that institutional sell order. That was right in here. 3,600, that was on the 14th, last Friday, 9:55 a.m. And of course, we backtracked a little bit, and then boom, we just started selling off right away. And there was, like I said, there was no offsetting transactions here that I could see. I watched it for several minutes. It didn't happen. So interesting. So then of course, we went down yesterday. So somebody knew something, or they just got spooked by the market, and that large sell order went in, and we started declining after that. Let's take a look at a couple other things. We've got just a bit of news here. Number one is that the Market Timer XL For Market Timer subscribers, we've had the NYSE version. It's now Market Timer XL NYSE. That version has always been included with your Market Timer subscription. They have now included the NASDAQ version. So they got the Market Timer XL NQ NASDAQ version, and that is included with your subscription as well. So if you haven't downloaded that, go to your client portal and download that for the NASDAQ. That's pretty good. Excuse me. Also for premium scripts, let's see if I can find that. They have now released the Market Timer Arbitrage Supply-Demand Index. They had the Strength Index for the arbitrage, but they did not have the Supply-Demand Index. And that is available now in the premium download section for premium subscribers. So just in case you didn't know. All right, let me see if I can get to some questions here. Dan, did you do anything this morning with the arbitrage trades?
It was a beautiful morning here.
Oh, good.
5 minutes and done.
And what's the good news?
$1,200 in 5 minutes.
Sweet. So I'm assuming that you bought it to a short position on the YMNQ.
That is correct. Yep, went short YM, long NQ. Watched it rally, got out at about 0.40 on the oscillator.
Oh, perfect.
And we're having major thunderstorms here right now, so I wasn't taking the chances. We've had power outages, so I'm like, yeah, we'll just take my little piece and I'll be done for the day, and we'll talk to Dave shortly.
Well, $1,200 in 5 minutes is pretty nice.
Can't argue with that.
Absolutely. Good. For you guys who don't know, Dan was one of my first private clients. He's from Minnesota, and his background includes 20 years in the IT industry. He's been doing stocks, options, forex, and futures for the past 5 years. He found us at Tradingology a few years ago, and he's used Iron Condor strategies, NRT strategies. He went through all the high-level option mentoring sessions that were released in 2018, 2017. And so now he's using both Market Timer and as a private client, he's doing the volatility arbitrage strategies. He set up his own trading business just a short time ago, and he's profitable already. So welcome, Dan.
Thank you, Dave. And thank you for everything you've done. For those that have just met Dave, you're in the right place. I've gone through numerous trainings through different corporations, and they just try to sell you things and not actually give you strategies. Dave is the exact opposite. Dave will teach you and give you strategy to make money.
Thanks, I appreciate that. So, there are a lot of guys out there who just sell stuff that doesn't actually work, and then they end up blaming you because it doesn't work, which is crazy, But anyway, good. So as far as the markets go, we've got a little bit of a sell-off. Instead of doing the arbitrage this morning, I ended up selling 100 of the diamond options. I'm up $2,300 on that right now. I did the diamonds at the 262 strike price. Sold those for about 86 cents, I think. And so I'm up $2,300 on those. I looked at what Market Timer was saying yesterday. They said that the selling that they saw yesterday was the largest that they've seen since January 31st and February 5th, which was when the market went down a couple thousand points in about a week. So I said, well, I'm going to use that to my advantage. And when the market was up 90 points, actually I waited till it was up around 70 points, and then I sold those diamond calls. That's turned out really well. All right, excuse me. Okay, let's get to some questions here. Euchre says, I'm looking to subscribe to Collective 2 to follow your trades. When I look into the brokerage list that they have for auto trading, the broker I use is not included. How can we best follow your trades without the auto trading that is following real time? I'm not sure. If your broker is not listed, there's no way to do auto trading. Um, and there is a bit of a lag in Collective 2. So when I do a trade on there, you probably wouldn't get it in real time, even if you were watching it. So I really don't have a good answer for you. I'm sorry. I mean, I guess you can subscribe to it, and I'm not sure. I believe that you would get some sort of notification when I do a trade, but even a like a minute or two, or I mean, even a minute or two delay in getting those trades is going to affect it. Wouldn't you say, Dan? Because I mean, like this morning, I mean, you were in and out in 5 minutes.
Oh yeah, absolutely.
Yeah.
And I see it sharing. You guys got questions. I did not record today. Sorry, I have been recording some that Dave obviously reviews as a private client. Today was one day I did actually get my recorder running, so sorry about that. But if you want, I see Bob had a question. I think it was Jeff saying, can we share? We could definitely walk through what I saw in the first 5 minutes if you guys want to. And Dave probably saw the exact same thing.
Yeah, why don't you do that, Dan? That'd be great. Awesome. I'd like to hear your perspective on this.
Let's see, do you have to unshare, then I can share? Or you just want me to talk through your screens?
You can talk through my screen. That's fine. If that's if that kind of works for you. If not, you can share your screen.
Yeah, just pull up, or let's get a view of both the YM and the NQ with your supply-demand lines there at the open. Then I also, the 4-hour bar was interesting. So I didn't rely on that as heavily since it was somewhat larger bars overnight. But it was definitely testing my eyesight here.
All right. Okay, so
There
here's
we
the
go.
4-hour.
So I always start with the 4-hour bar.
Let me get it a little bit closer. There we go.
There we go. So it's actually, those are somewhat larger, kind of opposite reversing bars that kind of cancel each other out. So at first look, it looks like it's going down. Then we expect it to go up after, but then this takes a little bit of feel, so this isn't your only decision maker that I use. So I take this into account, where typically if we're going down, it's going to come up after the overnight hours and vice versa. If it's been trailing up overnight, it's going to come back down.
Right.
So then I look at, then I wait for the open, I set my YM and NQ, I set a line just like Dave has here about where it's trading, where it's going to open, just for my own visual, and then I'll move that to the middle of 5 minutes. But like we were saying today, I was already out in 5 minutes, so I didn't even set that bar until after the fact. But what I did is I watched the SD numbers underneath, where it's at 1.9 right now and 5.4. I believe those started in the neighborhood of 4 and 7, I think it was.
Yep, it looks like around 4.2 on the YM, and the NASDAQ was up around 6 or 7 there.
So that's my key indicators, looking at where the strength is or the supply demand is, and then the strength as well as an additional kicker underneath, just to see which way the momentum is going to go. And so I took, since there was less supply demand in YM and more in NQ, that was my decision to go short YM and long NQ. And then I just watched the percentages expand, watch the arbitrage, the oscillator, down at the bottom there, which is at a 0.8 right now, which is ridiculous.
Yeah, wow, that's crazy.
So you start watching that, and as that number goes up, that's the only number you look at. And I'll tell you, everyone likes to watch profits. It's easier to watch that number than to watch how much money you're making, because you'll get out too fast if you're watching the dollars. So watch that ARB number right there is the key factor. If that starts going back down, you know that it's going to start going the other way, that you can take your profits. But if it continues to just kind of bump and go up, just ride that until it stops bumping up, and then get out, or whatever you've hit a goal that you wanted to hit.
Yeah, that's actually a key point, because the oscillator is going to tell you. Now, when you do the oscillator, after you get into the trade, are you still on the 4-hour, or you jump back down to the 5 minute?
I switched to the 5 minute.
Yeah. Okay. Yeah, because that's going to.
Which was a massive 5 minute bar.
Yeah. Yeah. So you
That's
caught.
the other part that you have to watch out for, is if they're overextended, it's very easy that they might reverse. So if you get a massive bar like Dave's going to show you here in a second, that one got out, then the first one started turning green, and that's exactly where I got out.
Yeah. So you got out when this was down about 0.40, which is perfect because it actually ended at around 0.35. So you caught that perfectly.
You're welcome, Greg.
Yeah, that is really nice. A nice trade there. Good description of how you actually got in and out of that position. Nice. So let's take a look at some other questions here. Chari's asking how many contracts, Dan?
2 contracts, and I took one out at 0.30 something, and I let the other one go until 0.4. So that's the other thing that I'll do is if it gets that extended bar, I'll take one contract off and then wait and see what the rest is going to do. When that second one was tickling the green, I just said, nope, that's enough for today. I'm done.
Yep. Okay, good. Yeah, good money management there. If you're doing multiple contracts, you want to take a little bit off the table, especially when you see a really big bar like that. Good job, Dan.
Thank you, sir. It's all from your wisdom.
Well, I'm getting to that point in my life, like we talked before, that I'm getting a few years. I'm ready to call it quits here, retiring, and so that's what I'm hoping to share with everybody. Let's see, what else do we got here? Bob says, can you provide a coupon for half price on our MTR? Yes, I will. Bob, you need to actually subscribe, or not subscribe, but follow the Collective 2 MTR strategy, because it doesn't. I'm not sure if you're showing up. If you are showing up, I'm going to send out coupons today. I've had about 2 or 3 people ask me for the coupons, and I'll send those out today. I just haven't had a chance to do it yet. Also, make sure you send me a private message on Collective 2 so I know that you're a Tradingology member. All right, so let's see what else we got here. Bob, is it Davey for the coupon code? No, that's Davey is the coupon code for the premium scripts at Market Timer at Strong Market. So it's not the same one on Collective 2. That's a different coupon code. Greg says, thanks, Dan. Much appreciated. Okay, so, all right, good. Yeah, Collective does connect to Thinkorswim. That's one of their brokers, I think, for auto trading, so you should be all set there. Absolutely. Yep, you should be all set. So, one of the other trades that we've been looking at recently that is really kind of interesting here is the ESRTY. So in HOLM1, we talked about doing ES and RTY and YMNZ. So we'd be long YM, long ES, short NQ, and short RTY. And right around the time that we were doing the live sessions last year, RTY switched from the ICE to the London Stock Exchange, and they changed the symbol, so it kind of messed things up. But we finally got it. But what I found was that since the mentoring sessions were over last year, that the ESRTY is actually a pretty nice little trade. It's very, very interesting. So what I did over the weekend was create another spreadsheet just for the SPX RUT using the ES and the RTY futures contracts. And so I'm going to upload this to the members area. One of the interesting things about this particular spreadsheet, did you have a chance to take a look at this, Dan?
I did. I actually took one contract in that this morning as well, which was funny because it was reverse.
Yeah.
So long ES and short RTY, and I got $12.50 in profits on that, and I just closed it out and watched the other one.
Wow, cool. $12.50 or?
Yeah, exactly. Between the spread, it was 62 up on ES and lost 50 on the RTY.
Yeah, there's it's a slower moving. It's a much slower moving spread, and actually, I had a private client I talked with yesterday, and he was struggling a little bit with the YMNQ. He's profitable overall, but he was having trouble reading the chart. And so I suggested that he starts out with the RTY and the ES. And so we talked yesterday about the fact that we're in a very positive binary trend here, the binary trend for the spread, and it looks really positive. So it would probably be up today, and it's up really nicely today. Well, it was, and now it's reversed.
It was, then the RTY came back,
Yep. So, but this morning it was a really nice little trade, straight up, and he made money on that, which is good.
So Eucharist had a question there. So my key factor was the supply demand, not the 4-hour bar, Eucharist. So I start with the 4-hour bar, and then we kind of zero in to see exactly what's going on. The 4-hour bar I kind of treat as a barometer, whereas it usually reverses whatever the overnight trend is typically what it does. Not 100%, but the majority of the time.
Yeah, so he's talking about these overnight sessions here from, well, this was 6 o'clock at the close yesterday, or open yesterday, and then it just kind of, in the overnight session, it just kind of started trending lower, but typically, like these bars here, these trend lower. These are small bars, and that indicates a reversal higher. This morning, these bars were a little bit larger. They're not quite as small as these here, and so there's a little more activity going on here. So you have to kind of look at this and say, well, we've got kind of a downtrend here, and then we've got a reversal higher on this 5 o'clock bar. And typically, what happens as soon as the market opens, it reverses. It goes the other way. Dave, do you use market timer ARB script also to get an ARB trade? I look at the 2 ARB scripts that I'm using. Let me pull those up here. These, especially now that the SD is out, I'm looking at these, so I'm thinking, okay, well, if I use both of these together, I want them to be in the same direction. So I'm going to use this on a 1-hour chart, but sometimes I use it on a 15-minute chart. But basically what I'm looking for is a confirmation. So at this point, let's see what we're doing on a 5-minute time frame. Looks like we're getting just a little bit of a reversal here. Looks like it's kind of bottoming out a little bit here. But I'm looking for confirmation from this to see if, in fact, if this trend is going to last. And so if I see green bars like I'm seeing here, although the strength index is pretty small, the arbitrage script on the SD is pretty big, I'm going to say, okay, well, maybe the decline that we saw this morning is not going to last. It's just going to back off. And also, a lot of times at 1 o'clock, you take a look at the 4-hour bar again, chart. For several sessions over the past week or so, here's the 9 o'clock bar, here's the 1 o'clock bar reversed. Here's the 9 o'clock bar, here's the 1 o'clock bar, it reversed. Yesterday we got a continuation, it didn't reverse. But that 1 o'clock time period is also kind of important. It could reverse it sometime.
Hey Dave, that's one thing I noticed about the ESRTY trade, looking at the 4-hour historical chart, was there was more often than not a reversal at 1 o'clock. Not that I'm going to probably take those, but it was just interesting to look at.
Mm-hmm. I've taken those on the YMNQ, and they have been working out occasionally, not a lot often. But you're right. Here's the. Let me see if I can blow this up a little bit. Let's see. Here's the 9 o'clock. Yep. Here's the 1. So right around that 1 o'clock time period, there's a potential for reversal. Here's the 5. Here's the 9. That's a good example of a big decline. Here's a big advance at 9 o'clock. Here's a reversal at 1 o'clock. So that 1 o'clock bar, I mean, you pay attention to it, you could, generate some additional profits from it. The ARB script, so I'm looking at this, so I'm thinking, okay, if this spread continues to widen like it is, like we're at 34 and 96%, that's like 60%. If we get any kind of a reversal in the afternoon in the markets, that 1 o'clock bar could easily reverse what we've done this morning, which provides another opportunity. So the key factor is higher SD number than number on the NQ. Yeah, so why don't you talk about that a little bit more, Dan? Because that's kind of an important factor, especially when you're making your decision in the morning about the YMNQ trade.
Yeah, so that's probably the biggest factor that comes into my decision making is, I'm looking at the RBOS later, I'm looking at the PERC chart, but they're just contributing factors, they're not decision makers. My decision maker is mainly the supply demand number. So whichever one is stronger, then I'm also comparing that to and see if it's lining up with where the difference in the percentages is, whether it's higher or lower. Like right now it's plus 32 and plus 92, so it's a positive 60 for the NQ. So if I'm comparing that and making sure it lines up with the supply demand numbers, which it typically does, because one's driving the other, that is the live. You're looking at a live view of what the supply demand is in the market. That they've come up with these scripts. So whichever one is stronger is the one that you go long with. So today, NQ was stronger at the open. Sometimes I'll watch it for a minute or two if they're close. Maybe that's just the day that we take off, or we just look for a different opportunity somewhere else. But that's the main key factor that I use is which supply demand is higher, what are these bars doing, everything puts the picture together. And then if you need to, you can watch it for 5 minutes, but sometimes, like if I watched it for 5 minutes, I would have lost out 1,200 and probably would have still made money because it kept going, but you get a feel for the opportunity. That's why, I paper traded it for a month solid. Then I was telling Dave, I'm like, all right, Dave, I'm going live because I'm losing all my opportunities here. So I don't know if he was like, you're not ready yet, but it was like, no, we're going. So I was trading live fairly quickly. And I have not had a negative today whatsoever. Every day has been positive that I've been in this trade.
Cool. Yeah, that's good. That's really good. I know that, oops, where did I lose you? There we go. Well, you had 5 years of trading experience, so that helps, I think.
It does help, yes.
Yeah. Plus your IT background, you have technical knowledge, you have a pretty good grasp of the numbers, you understand the percentage changes, and so that also is a contributing factor, I think. I think somebody who I don't know if you'd agree with this or not, but I think somebody who is brand new to trading, this is like living on another planet, It's like, this is going to be like, wait a minute, the market is supposed to go up or down, and you're supposed to take a bet, if it's going up or down, but actually spreading these and understanding how the spreads work between the different financial instruments is I think a little tough for some people to grasp, but
I would agree. It's definitely one of the safest things you can do too. But that's why I talk to friends. It's like the market goes up and down. It's crazy. I have no idea how you guys even look at that stuff. It's like I could show you a couple of things, And so in all reality, well, yeah, it's a comfort thing. So if you're uncomfortable and if you're risking too high, maybe the options is a better side to go because. As you pointed out, and I think it was a video you did last week when there was that massive move and there was a little delay in the numbers where everything just shot up crazy. It's like, yeah, you can get burned real bad if you're on the wrong side of something. So paper trade it as long until you feel comfortable. I set up my paper trade accounts with what I was going to actually fund my accounts with, so I wasn't trading, their $1 million or $500,000, whatever you want to set it at, because that's not, unless you have those kind of funds, that's not reality. So I would set my paper trade accounts with what my real accounts were going to be funded with, so I get a feel for, okay, here's what I'm risking, here's what we're doing, this is what this does, and just get comfortable with it. I've seen, I've talked to different people over the years, and some people say paper trading doesn't matter because it's not real, so you do things that you wouldn't do. I see that side of it, but it also gets you a feel for the mechanics and knowing where to push the buttons and how to read the charts and how to watch these supply demand numbers. So it gets your, it's seat time is what it is, and it gets you comfortable with the platform that you're trading on. That's the biggest thing. And then once you get those comfort and those mechanics, and you start to understand how the bars move, what the graphs look like, it takes away some of that fear when you are in your live account. It's real dollars.
Right. Yeah, exactly right. Yeah, that's true. I think that, getting the mechanics down first before you go live is probably crucial. And also,
I made plenty of those mistakes early on. Oh, click the wrong button. I'm on the wrong side of this. There goes, $2,000 has gone on my paper account.
Yeah, you have to always know. That's why when I set up this grid here for the futures contracts, I always do the long side on the left, the potential short side on the right. And so when I do opposite, then I'm going short the position. When I'm going long the position, I'm always making sure that I have, I'm long the YM or long the ES, and short NQ and short RTY, and then do the opposite. So I keep these on the same side because I know, like with all the charts, they're all set up YM and they're set up ES RTY. The symbols in the charts actually makes a difference. So if the first symbol is typically the one you're long when the spread is going higher, and you're short that one if it's going lower. So that's really important to keep in mind. Chari, I saw your question here. TOS is Bob says TOS was not an option when you signed up. You know what? I may have been mistaken because I think because I'm a trader on the trader on Collective 2, I can connect my TOS account, but I'm not sure about as a subscriber. So I may have misspoken and told you that you could set up your TOS account for auto trading as a subscriber, but I know it's available as a trader, but I guess we're going to have to look into that a little bit further to see. I know they do have interactive brokers, like Bob said, so you may have to do something else here.
Stay with them, Bob. They're better commissions anyways. Just put a small amount into Thinkorswim so you can use the charts and trade in IB.
Yeah, you don't even have to have money in Thinkorswim, actually. You can do it without it. You just use your paper trading account like I do. For you guys who are new, I just use the Thinkorswim paper trading account just for the indicators. And then I trade through, I used to use interactive brokers, and I actually do like them a lot. But I'm using Lightspeed now. But interactive brokers, I think, is probably the best option for most of you if you're interested in auto trading and Collective 2.
I just set up one of those accounts we were talking about the other day, Dave, yesterday. It's my application process is going through, yeah.
Oh, good. Okay, good. Yeah, they have you do the friends and family one?
Yep.
Yeah, cool. Charlie's asking, how do you determine what to short or go long using the ARB oscillator? It depends on the strength in the SD or the ST. Is that correct?
That is correct.
Yeah, that's correct. So when you see, just like Dan described, when you see the SD on the New York Exchange much stronger than on the NASDAQ, then you want to go long the spread. Long the spread means long YM and short NQ. The opposite happened this morning. This morning, the SD on the NQ was much higher than the SD on the New York. And so that gave him an indication that the NQ was going to be stronger. In that case, you want to short the spread. Short the spread is short the YM and long the NQ. And that's what makes the spread decline. Now the oscillator, what it does is on the time frame that you put it on, I'll put this a little bit bigger, depending on the time frame that you're looking at on the 4-hour chart, you can see that the oscillator is telling you what the spread is, and this is where the money is. So when the oscillator is going down and you're short the spread, you're going to be making money. If it's going up and you're long the spread, then you're going to be making money on the upside. But what it does is it tells you how far this spread has widened in that time period. So on the 4-hour chart that we have this morning, when this bar opened at 9 a.m., but as Dan knows, we never enter at 9 a.m. We wait until the open of the market so we can get the reading from the SD and the ST scripts. Now we're down, wow, it's a 0.64, which is pretty good. I think it was more than that, though, so it looks like we reversed just a little bit here. But the oscillator on any time frame will tell you how much that spread has moved in that time frame. And this is actually, this is money here. So on the 5-minute time frame, we moved approximately 0.34, almost 0.35, and you can basically take that and multiply it by 100, and so each contract is worth approximately $350 in profits per contract spread. So that's $700 right there, just that one move, approximately $700. It's not always exactly the same. Sometimes it's $550, sometimes it's $650. So someplace in the $550 to $650 range, it's going to be, when you see that kind of a spread widen like that. So a small spread, a small movement in this at like 0.13 is worth probably about $260. So it's about double that. On the RTY, it's approximately, I think it's about $100. So if we bring up, so it kind of gives you an idea of exactly how much money you could actually make. So yesterday, the spread was up 0.51, so it's about a $510 move per contract spread. So it's a little bit less, and it's also less volatile than the YMNQ. All right, let's get back here. Okay, Bob says the interactive account must be used exclusively for auto trade. Oh, is that what they do on Collective too? So you can't use it, you can't do anything else on your own? You could probably do a sub account or something that you could trade on your own, I suppose, if you had, if you wanted to split your money between like a sub account and a whatever account that you're going to use for auto trading. Euchre says, Dave, so when your trades are posted on Collective 2, they come from TOS demo account auto trade? No, it doesn't. No, it comes from my real account, but I also don't put as many contracts. I can adjust the number of contracts I do on Collective 2. And because I'm a little more conservative with Collective 2, because I realize that there are people following me and they're actually putting real money into these trades, which kind of shocked me, I guess. Right now, there's 367,000 asset under management on that particular account. So people are actually putting money into that trade. I have two other accounts on there, by the way, that I'm just kind of playing around with. The problem with the Collective 2, though, is the data, number one, is 20 minutes delayed, so I never quite know exactly what my position is, profit and loss. So I use the TOS paper trading account to enter the market at approximately the same time as Collective 2, so that I can get an idea of what the profit and loss is on Collective 2, because they don't give you real-time data. Yeah, some of the strategies are private because I'm just playing around with them. I'll make them public as soon as one of the strategies I'm working on with Collective 2 is a swing trading strategy using Market Timer, and so I'll be as soon as I'm testing it out. As soon as that's ready, you'll be able to see that as well and subscribe to it. Bob says, make me some money, Dave. I will. I'm much more conservative with the strategy because of the amount of money that people are putting into it. But it will. There's absolutely no doubt in my mind. This is one of the things that I don't know. I think Dan is starting to grasp this, but it's definitely one of the things that you want to keep in mind. I mean, the arbitrage strategy alone. I was talking with someone yesterday, and they said, "Well, on the graph there, you got some pretty big dips." And I said, "Yeah, but the max drawdown is still only 13%, so it was pretty. I mean, compared to some of the other strategies that you see on Collective 2, that's nothing. I mean, I've seen some drawdowns that are 40, 50%. I just kind of started playing around with it to get a feel for the platform. And I realized that all of their, like if you go to enter a trade up here, they've got a chart. This is kind of a new thing for them. They've got a chart here, but this is 20 minutes delayed. You can see that it's at 26,102 on the chart here, but let's see, what is this? This is YM, but we're at 26,183. I mean, so you're at least 20 minutes behind or more on this chart, and it makes it really hard to get in and out of these trades and try to figure out what your P&L is, because you have to. I'm constantly switching between this and my paper trading account or my real account to determine what the actual profit and loss is on the position. So I'm kind of hoping that at some point they're going to offer, real-time data. But typically I don't use. Here's another thing too that really annoyed me about this. And I'm going to get back to my point about the dips in just a second. But I would go ahead and put place a buy order in here. And then I'd switch the symbols. I'd have to do one at a time where I open up two windows. So I've got the YM and the NQ. And so I'm switching from the YM. I place a buy order if I'm going long. And then I switch over to the NQ. And there's this little window that pops up saying that I placed the order for the YM. And it won't get out of the way so I can place the order quickly for the NQ. And so there's like this delay between the time that I can actually put the spread on. So I'm long the YM without the NQ yet. It just drives me nuts.
I had the same thing when I was trying to trade multiple accounts and Thinkorswim, it's like the drop down. I'm like, yeah, I know get out of my way.
Yeah, I know, get out of my way. And there was no like little X in the corner that I could exit out. So I used their older window here in order to enter the trades. And then all I have to do is I just click on the symbols that I use the most. I go to buy to open, I hit submit, then and it doesn't have a pop-up window on this one. So, but anyway, yeah, so let me get back to my point here on these dips. So I pointed out to somebody, I said, okay, so basically what I did was I hit a fat tail. A fat tail on the spreadsheet is when it crosses from a long position to a short position. So on this particular dip, it was back on August 5th. And this is illustrative of, and the reason I'm bringing this up is because it's illustrative of the way this particular strategy works. You can see that we have a long position here. The bell curve is starting to fill out on the positive side, and then it goes negative, and then it goes positive, and then it goes negative, and then it goes positive. So there's kind of an oscillator for the YMNQ. And so what I did was I said, okay, well, I'm going to put a position on. This one I actually forgot about. So I just put it on Collective 2, and I forgot about it, and it was down around here, and we were losing like a few $1,000s, a couple $1,000s from here to here. And I said, oh, that's okay. I'm just going to wait. Because I know that the oscillator, the bell curve here, once it's done with peaking out on the plus side, it's going to go negative. And so if I was negative and I was and the spread was going higher, all I had to do was wait because I knew it would go negative, and that's exactly what happened. I just stuck with the same position, and boom, it went right back up again. Same thing happened here, although I knew about this position. I just hit the fat tail, and I just said, okay, let me write it out. And I'll write it out, and I said, I know it's going to reverse, and that's exactly what happened. Was I just wrote it out, and it just, boom, it reversed because of the way the spreadsheet acts. I had somebody in the first, I don't know if you remember hearing this on the videos, Dan, in HOLM1, Jeff was talking about the fact that he got into a position on the wrong, he was on the wrong side of the trade. I forgot if he was positive or negative the spread. But he said, you know what, I'm paper trading it. I'm just going to see what happens. I'm just going to hold on to it. And he said he was down maybe $600-700 on the spread, and then all of a sudden it started turning around, and he was up $600 or $700 after about a week. And he says, "Why does that happen?" I said, "Well, it's because of the bell curve. You know, if you go negative, all you have to do is wait, and it'll go positive." And so if you just hold, sometimes you just hold on to these positions, which I've done in the past, and a losing position will turn out to be a winning position after a few days. All you have to do is wait.
It's like the guy says, you have the ability to stop the race whenever you want.
Exactly. Yeah, that's right. That's exactly right. You listened to that interview, huh? That was a great interview.
I got part of it. I got to get back to him. But yeah, that's amazing.
Yeah, that was a really good interview. Williams, I forgot his last name, Zampa or something. So I just waited, and of course it just came right back. Now I'm trying to be, after September 10th here, I'm trying to be more conservative because I see like people have put almost $400,000 of real money into the strategy. And so I'm trying to be a little bit more conservative here.
Well, the way this strategy works, it's going to be $1 million before you know it.
Well, that's another thing too, is that, you know, I get these nervous guys who, you know, they see, oh, it's drawing down, but oh no, it's going down, it's going down. I said, well, just wait. and so this little drawdown from last Friday, which was just a nightmare because I tried to reverse the position. That's another thing too, is you're using a web browser, you know, to make trading.
Another tool, there's just more things that can go wrong.
Yeah, so you're using a web browser to enter these positions, and so what happened on this trade last Friday is I actually reversed it, which would have made a profit on the position. I got into, I forgot which side of the market I was on, but I was on the wrong side. I knew it, and I reversed it, and it was just, the browser was just hanging, waiting for the reversal. It was just hanging and finally I had to open up another window, go to another window. By that time the market had moved against us, against the position pretty well. That's why we have this little dip here, but it's very temporary. I mean, if you stick to the spreadsheet, like yesterday, I identified the fact that this is probably a peak in the YMNQ, and so I was anticipating a down move today. Based on the spreadsheet. I don't know if you saw the same thing or not, but you know, once you're at 2.56% on the last column here, back here, when it peaked at 7, started coming down, had a few negative days, and then yesterday we're only at 0.99 on the 5th, which is less than that, right? So it's already starting to look weaker. And then you got a 7, you know, we went from 2 to 7, which is typically about where it peaks.
No, I'm glad you brought that up because that is one other thing that I did do before the open is I was plugging in the current numbers just this morning. It was already showing me a negative. So I was slanted towards negative as well. Yeah.
So, yeah, see what happened, a really nice bell curve starts out kind of low, like here it goes from 1 to 6 to 7 to 9. That's typically what you want to see. You don't want to see a 2 to a 7. That's kind of a very sharp move higher, which indicates the potential for at least that trend is over. Now, ideally, you'd like to see some negative numbers in this first column of the binary trend. You'd also like to see more numbers in the trigger ROC and trend here, but definitely looked like a peak to me yesterday in the spreadsheet. Eucharist is asking a question on the swing trading using MTL, MT Study XL, Dow S&P XL file. Swing changed to up on the 11th. Third column was 112. Flow is 117. Would you enter this trade long on the first date or waiting for the flow under 90%? Didn't you ask that question before? I thought it sounds very familiar. Sounds very familiar. Let me see if I have that spreadsheet.
There you go.
All right, so let's see. September 11th. You got the float 117, third column is 112. Okay, so that's actually a pretty interesting question. Would you enter this trade long on the date or waited for the flow under 90? No. Here's something else. Actually, let me show you this. This is a beta version that I've been working with those guys on. Let me show you that. It's not something that we update every day, but it's a beta version because we do a lot of testing with this particular spreadsheet. And so we do a lot of tracking. We do more tracking in this particular beta spreadsheet than we do in the regular one that you guys get. But one of the things that we identified, we took an extra column next to the flow in the pipeline, and we started looking at what makes it, where exactly would you go long or short on a swing trading basis between the third column of the pipeline and the flow. And what we found was one thing that we identified, especially in the swing trading video that I did, was that the difference between the third column right and the flow is like over 14 or 15%. That's the time typically when you want to go long the Dow or the S&P 500, whichever you're trading. And so let me just zoom in here a little bit. So if you're going to go long, the time to do it is when these two have a very large gap between those two. So it's like 14 to 15% or more. And so if you did it on this particular day, right here, you would have had a nice move. The next day, the market was up 396 points and it was up 110, 89, and 63. So it was a nice move. Now, when would you take a short position? Well, we found out that taking a short position was not ideal when the third column of the pipeline was very, very low, like when it was here at 50%. That's not the time that you want to take a short position. What we found was when we crunched some additional numbers based on the third column and the flow, was that when they are almost equal. So when there's a very small gap between those two, that's the time that you want to actually take a short position. And when it's actually separated by 15%, it's a good time to take a long position. I'll have to take a look at the video again and see if I misspoke that.
Key point there, Dave, too. It might be just semantics the way my mind works, but when you say percentage weight, I think of the math, where it's like, okay, I go from 100 to 150, that's whatever. Think of it as percentage points, not necessarily the difference in percentage. Some people might think that and get confused. That kind of threw me for a second because I was like watching you do the math. I'm like,
I see what you mean. Yeah, that's a good point. That's a good point. Yeah, that's right. Yep.
So literally just the difference.
It's
right there,
literally
minus 127.
Yes, exactly. Yes, that's a good point. Yeah, it's literally 143 minus 127. Exactly. It's not a let's say you take that, the difference net is 15, and so if you did that on a percentage basis, no, it's not a percentage basis. You're actually just subtracting the two numbers and getting the difference.
Yeah, I saw that. I'm like, that's not 15%. What are you talking about? I'm like, oh, it's 15 points. I get it now.
Yeah. Yeah, I'll take a look at the video, Eucharist, and see if I need to change that. All right, guys, it's 11 o'clock. I appreciate everybody joining me and Dan today. Thanks, Dan, for your participation. I appreciate it. Hopefully, I'll see you guys all on Thursday, and we'll see how the market reacts. We're up 92 points right now. We'll see. We'll see how this tariff thing plays out. The news definitely sent the market down last night. I did not short the market, though, because obviously the news items just really affect it. Your best bet to make money in the markets is really to do the kind of arbitrage spreads that we've been doing with YMNQ and ES and RTY, because they're not affected by the market, as I mentioned in the video last week. Really, I mean, we can go back to that day. Let's see if I can pull it up here.
At the end of the day, it's just math.
And yes, the market is just math. It really is. It was this day here. Look at that. You're down here, and boom! It looked like TOS was frozen, and it was. I mean, that is right there. It's 9:59, and it opened at 9:96. That's like a 40-point move, 40-point gap. And if you're short, you're in trouble right there. But the spread held steady. So,
I was watching that bar literally like I was live. I don't think I was in the trade at the time. Like I was out, but I was watching the screen.
Yeah.
And I had on 1 minute chart, and all of a sudden there was just a massive bar at 1 minute. I'm like, holy cow, what just happened?
Yeah, exactly. It was crazy. I kept saying, "Is something wrong? Is my internet okay?" I actually have Ethernet on this computer. And I said, there's nothing. I mean, something's going on. Yeah, it was crazy. That was probably one of the biggest moves I've seen in years in the market that quickly. All right, guys. Thanks again. Thanks, Bob, Greg. Awesome. Thanks, Keith. I appreciate you guys being here. Chari, I'll let you know today for your start date. Okay, terrific. I appreciate that, Chari. JD, awesome. See you guys soon. Hopefully, I'll see you on Thursday. And good. Do some back testing there, and that's good. Win rate was 70%. Okay, good. Really, Eucharist, look into YMNQ and the arbitrage strategies. I think you're going to find that to be much more successful. All right, guys, have a great day. I'll talk to you again Thursday.
Thanks, Dave.
Take care, Dan. Bye.